All right, friends, it's Norman here. Everyone is freaking out about the ULTY price dropping, and I feel like it is a great reminder to check in and re-educate on what you're actually investing in when you are trying to get into Yieldmax's ULTY. Okay, so the reason why we have an 80 and 90% annual distribution rate is because these stocks are extremely volatile and they are the highest um, performing stocks in that they are the most unpredictable, up, down, side to side, back and forth type of stocks because those stocks pay the most premium for the options trades. That is the number one goal of the ULTI fund is to find those stocks, buy them, and run covered calls on them. Okay, they make the most premium. Unfortunately, with this strategy, though, if you're buying these stocks that are highly volatile, they can go up, but they can also go down. So, if we're looking at the chart here, we've got our 6 month chart. It doesn't look too bad if you're looking at the 6 month chart. Okay, March with um, Trump rolling out the tariffs and um, the lows here. We're looking at you know, 550s, 540s, and then it bounced back up above $6. But unfortunately, the last month or two, we have dropped back down to those lows seen back in April. And it is frustrating to see the indexes go up, seeing the Nasdaq, the S&P, the Dow, they're going up while ULTI is continuing to fall and fall hard. So if I jump to this 1 month chart, it's just completely dropping. And every single week, you're like, okay, well, I'm supposed to keep buying as it goes down. And it just keeps going, keeps going. And we had this little rally here that made us feel a little bit better, like we were in the safe zone, but it continues to fall off the cliff. But remember that Ulti is investing in quantum computing and nuclear companies and crypto companies. Bitcoin is down. There's a lot of uncertainty with the Federal Reserve and where interest rates are going to go. We're getting really bad job reports coming out. So it's not good signs for the labor market. Ulti is responding the way it should with recent events. So Ulti is performing how it should. Remember, um, with the strategy though of Ulti, if you want to buy into Ulti, I would just say that 40% of the distribution is yours. But the rest of that 40 or 50 on the other side of that 80 or 90%, you need to reinvest. Okay. Ulti is going to drop, and I think it's just a part of the strategy. Jay Pasticelli from Yieldmax says this about Ulti time and time again at interviews. These funds are supposed to be reinvested. So to keep up with the NAV erosion and NAV decay, whatever you want to call it, you got to continue to reinvest every single week. A portion of that should be reinvested back in. Hold some cash on the sidelines for when there's a major dip. We had a big drop uh, this last few days here, last week, from 576 all the way down into the 40s. This is where you have the cash on the sidelines and you put it back into Ulti and help with that overall, um, price, average price that you're in Ulti with. So, uh, you know, steel yourself. You have to be calm in these situations and know that this is going to happen, but you have to continue to invest. If that's not a part of what you were thinking Ulti was going to be, consider getting out and going into something passive and safe. Okay. Look into the NEOS funds. They're going to be paying you a dividend every single month with some upside. but that is not the ULTY situation, okay? So, re-education here, ULTY is gonna be just fine. There's always gonna be high volatility stocks that are gonna pay good options. So those distributions are gonna come in every single week, but ULTY price go down. That is what you should have in the back of your head. Okay, everyone have a wonderful weekend. Don't look at your account, and um, tomorrow, next week will be a better day. I believe a better week. Norman out.